And just a little bit about myself. I'm a graduate of the University of Pennsylvania, and I'm a former professor at Jefferson University in Philadelphia. I've been involved in the financial markets for over 20 years, and I began trading the futures and forex markets about 10 years ago. And I've been involved in the optimization of software systems for the last 10 years via mathematical modeling. In fact, my part of my PhD thesis regarded the mathematical modeling. This was many years ago. Before I think that it was before the Wang computer came out. It was mathematical modeling decompression optimization schedules for the Navy via a very novel program called ASOP, which was the Automated Engineering and Scientific Optimization Program. And that's how Right Line Trading came about. Now, when you optimize a software program for trading, you have to define all the independent variables that you believe are important to go into the equation to optimize the dependent variable, which is the trading entry. If you optimize the dependent variable well, the positive predictive value of that trading entry is going to give you a winning percentage of 85% or greater. So first you have to define a strategy and then define parameters to put into that strategy. Now, certain people believe that price action provides you with all the information that you need to provide you with a buy-sell trigger that is precise enough, has the precision, and precision is sensitivity over specificity, to make you a successful day trader. Others believe that indicator analysis, that is some unique composition of indicator signals, some confluence of indicator signals, are out there that will give you a blue dot buy or a red dot sell with the predictive value also that's extraordinarily high enough to get you into a trade that's going to be successful 85% of the time or greater. A further subdivision of these traders are those that believe that multiple time frames are important, and they use multi-time frame analysis in order to confirm the validity of their trading entry. And at Right Line Trading, we don't reject all of these hypotheses. We sort of reject and accept them all, but don't believe that any of them are good enough as standalone analysis in order to get you into a trade. I don't believe that price action alone provides you with a very low risk, high predictive value entry. Now, neither does any confluence of indicator signals without a profound respect for price action or market structure. Now, if either of the above were true, the financial markets could be robot traded for billions in profit. If there was some confluence of indicator signals that could get you into a trade, providing an auto trader would be a very simple thing. If some type of price action, again, could consistently get you into winning trades, that can be programmed, and an auto trader could take those trades and just get consistent winners. The fact that I don't believe that either of these exist, and what you really have to do is take all of these parameters into consideration. So it's the goal of Right Line Trading to combine market structure, for which we really have a significant respect for, indicator analysis, which we use to confirm what we believe market structure and price action are telling us, and do this on a fractal basis, which is a multi-time frame basis. And provide that in a simple trading platform that's been optimized mathematically to provide you with remarkably accurate trading entries. Now let's look a little bit about our methodology. Now, as part of our methodology, we do not trade or call tops or bottoms, and we do not trade reversals, and we also do not counter trend trade. We do not try to predict breakouts, and we are really trend traders only. We believe that it's the institutional guys with the big money that set the trend, and what we want to do is we want to be on board with them. It's our goal to define a trend early and get on board fast. If you counter trend trade, I think you're trading against the big money. I think counter trend traders are not particularly successful. And although there are many indicators and many signals that do fairly successfully call tops and bottoms, the question is do they do it with a predictive value high enough to make you consistently profitable? And in my opinion, that is not the case. You cannot call a top or you cannot call a bottom with the precision or predictive value high enough to make you profitable. The only thing that you can do is trade with the trend, trade with the big money, and get on board these moves as early as possible. This is a chart of just price action. And although price action is extremely important, you can see here that you really have a low pivot here. This is 100% retracement, and you've got an engulfing candle, and it does very nicely predict a move up. But if you use this only, it won't consistently give you the kind of signals you need, and that's what you're looking for. You can always find the signals that are going to work. It's trying to look for the signals that don't work. And when you trade with sensitivity, what you try to do is you try to get into every move. When you trade with specificity, you try to stay out of all the false moves. And that's really what we try to do. We trade with a tremendous amount of specificity. The thing that we try to do is to stay out of the false moves and use our rules and regulations to filter all the trades. Now what we do is we define market structure and price action with a 50-period simple moving average. Nothing complex. And we only go long above the 50 and go short below the 50. We believe that the bulls are in control when the market is above, and the bears are in control when the market's below. If we take a long below the 50, we're counter trend trading. If we take a short above the 50, we're counter trend trading. And as I had mentioned, that's something that we never do. Then we put in what's called our modified 15-period moving average. It doesn't move with a 15-period simple or a 15-period exponential. And I'll show you our trading today. It really saved us from trading an enormous amount of chop and false breakouts. We do not trade a yellow 15, and it's one of the rules that we never break. When the modified 15 is yellow, we call it, we never trade. We wait for the 50 and the 15 to be red, or the 50 and the 15 to be green. And that defines our uptrend, and that defines our downtrend. Another parameter, or part of the in a multivariable analysis, is how far off of the modified 15 we take a trade. And what we did when we looked at a year of market replay data was that you really want to trade 4 ticks or less off of support or resistance. So when you're taking a long trade, you want to be within 4 ticks of the modified 15 or the 50, trading right off support. When you take a short trade, you want to be within 4 ticks off the 15 or the 50, trading right off resistance. So we put in an indicator that tells us how far the open of the candle is from the modified 15. If it's more than 4 ticks, we know that the trade has the possibility of retracing back into support or resistance and stopping us out. And it's really all part of defining what parameters are important in that multivariable equation in assessing the precision or predictive value of our entries. The other thing that's completely that is important is to try to confirm what we see with market structure with indicator analysis. And the three parameters, or the three indicators we look at, is one is order flow. The second line on our three-line indicator is stochastic, and the third line is momentum. And you're going to see later on that the color and direction of the modified of the three-line is projected directly onto the price bars, so it doesn't take a whole lot of work in order to see whether you have the three-line indicator in your favor. But if the line is red, and this does fractal analysis and analyzes data from multiple time frames, and I do not believe that looking at one chart and one time frame gives you the analytical power to provide you with optimal trading entries. So we try to get as many of our indicators to assess data for multiple time frames to allow us to step back and not have to look at multiple charts, because it is very, very cumbersome in a fast-moving market to have 2 or 3 time frames up and also look at 2 or 3 markets at the same time. So we have our indicators do it for us. So if the line is red, we're down on all time frames. So if it's red on line 1, order flow is down. If it's red on line 2, stochastic is down. And if it's red on line 3, then momentum is down. If it's blue, we're up on the longer term and we're down on the shorter term. And we know that longer term time frames rule so that it's okay to take a long on a blue, because our longer term time frame analysis tells us that order flow, stochastic, or momentum are up. If we're orange, then we're down on the longer term time frames and we're up on the shorter term. But again, longer term time frames rule, so it's okay for taking a short. It's just tough to take a short on a blue or a green, or a long on a red or an orange. Now here's the type of trades that we look for. And I'm going to move over to our actual trading charts and show you all of our week's entries in the live trading room very, very soon. But I just want to give you a flavor for what we're looking for. What we're looking for is the 15 and the 50, and this actually shows it better, for the 15 and the 50 both to be green, so we know that the trend is up. We have a 2/3 candle break of the 50, and you can see that the candle's outlined in blue. And this blue outline occurs intra-bar, and these are range bars. So we know that if the candle matures to the upside, and we have a range maker, which tells us where the candle's going to close to the upside, we know that we have a 2/3 candle break of the 50. We know that it's going to occur with order flow, stochastic, and momentum in our favor. So we put a buy stop limit order 1 tick above the close of the candle, and up we go. I mean, we're trading with the trend, and we're trading with order flow, stochastic, and momentum that's being analyzed on multiple time frames. So we're adhering very strongly to market structure. We're adhering very strongly to the trend, and we've got indicator analysis confirmation. And here's the same thing with the short. We've got the 15 and the 50 to the downside. We break the 50. This is a clean break. The whole candle closes below. It's outlined in yellow. That tells us that we have order flow, stochastic, and momentum with us to the downside on multiple time frames. And down we go. Now here's a break of the 15. Same thing. 15 and 50 are down. And listen, sometimes it takes quite a bit of time for this type of formation to occur. You have to trade with a lot of patience. And sometimes we sit in the trading room for 45 minutes and don't get a setup. And then they come like rapid fire. But you just have to be able to sit, and part of day trading is having a lot of patience and having a lot of adherence to the rules. But we finally get a break of the 15 to the downside with order flow, stochastic, and momentum with us. We're in 1 tick below the close of the candle. and down we go. Now, I just want you to know that there's no easy way to day trade for profitably. There's never going to be a blue dot long or a red dot short that's going to get you into a trade. The software is never going to do all the work for you. There's a 10% discretionary component, and we have people in the trading room that trade better than I do. That 10% discretionary component really gives them a better feel for the market than I get, and it's basically a matter of pattern recognition and repetition. But ultimately, there's some part of the brain that controls that analysis, and they out-trade me. But basically, I rely on patience and an adherence to the rules, and it almost always works. Now here's a move to the upside. We've got the 15 and we've got the 50 long. We've got order flows, stochastic momentum with us to the long side, and up we go. Now there's one more component to the trading that is really essential, and that is what we want to do is we want to take retracements into a defined trend. We just don't want to get on board a short trend or get on board a long trend at any arbitrary point, because we never know when we're going to get ourselves into a small retracement, get stopped out, and then have the move continue on. So what we need to do is we need to wait for a break of a trend line, and then wait for a retracement to occur, and then for a continuation back into the trend. Now, it seems like a lot to ask for, and sometimes it is. Sometimes the market makes big moves to the upside and big moves to the downside, doesn't give us a retracement or an opportunity to get in, and we can't trade. But that's part of trading with a significant amount of specificity. We need the market to conform to our rules, or we don't take trades. And if we try to get into every big move, we're going to wind up getting stopped out a lot. Now, the software, I did not put the A, the B, and the C on the chart. Software does. Now, anytime that two candles of the same color occur in continuity, then you have a trend, and an A appears. So you can see that we have a downtrend. Now we're waiting for the 50 and the 15 to both turn red. We break the 50 is green. Then you can determine what color you want the B to be. I like it to be magenta. But then the B candle are all the people or all the traders calling the bottom. They're saying to themselves, right here, the market's moving down, but I'm going to buy it. So they're into this trade, and these are all buyers caught in what's turning into a downtrend. Then they get engulfed by the C candle. And this is our most powerful entry, is when a C engulfs, a short C engulfs all the buyers caught in a long B, or a long C catches all the sellers caught in a short B. Because this trade moves down with two forces. And again, these are all the counter trend traders. These are all the traders calling a bottom. This is where we never want to be in a B candle like this. We want to be in the C candle, engulfing all the traders in the B candle. So one tick below the close of this C, we move to the downside. And this trade is propelled further down by two forces. One is the addition of new sellers, and you can see if they engulf all the buyers in B, there's a lot of selling conviction here. But in addition, as the trade ticks in one tick below the close, you're going to start stopping out everyone in B. I mean, the buyers in the B candle are all going to start to panic, and they're going to start closing their positions, or electronically they're going to hit their stop orders. And in order to close it out, they got to sell, because they're holding long positions, which they got to get rid of. So these trades are really propelled down very forcefully, and it's really amazing to see how fast they move. And I'll show you the dilemma it's created for us, because these trades really move with tremendous momentum to the downside. Now here's another trade, exactly the same structure. We get a move down, and you can see the move through. We could have taken the break in the 15. If we didn't, we simply wait for a retracement. We get all these buyers in the B. They're engulfed by the sellers in C. We're in one tick below the close of the candle, and down we go. These are on our bread and butter trades, and this is really what we look for. Same kind of trade. We can't take a trade here because the 15 is red, but the 50 is green. Have to wait for the 50 and the 15 to come into sync, as I say. But basically, we want them to be both red to confirm a downtrend. We finally get a move to the downside, get a retracement right back. Remember I said we need to be within 4 ticks of the modified 15 to the short side or the long side. We're right up against resistance to the upside. The C engulfs all the buyers caught in this unfortunate B candle, all calling a bottom, all calling a reversal. They're engulfed, and down it goes with that dual force. The same thing here. Now these are momentum entries. Now these candles don't engulf the counter trend traders and the red candles, but they all ultimately wind up doing. You get a break of the 15 and the 50, retracement right back into the 15. See the candles outlined in magenta, which tells you that you have order flow and momentum with you to the upside. You have a retracement right back to support. Up you go. You get another retracement. If it stops you out, up you go. And again, part of the force that propels these trades to the upside is the fact that we're stopping out the traders who are counter trend trading and trying to call a top here. And in these big moves, they do it unsuccessfully over and over and over again. Another momentum entry. This is the alignment of momentum on multiple time frames. It's hard to see here, but the candle is surrounded in pink. You have order flow and momentum with you to the downside. Again, the break, the retracement right back into the modified 15. The 50 and the 15 are red, and down you go. Dual force again, overrunning the people in this, all stuck in this green candle to the upside, swamped by additional sellers. Because, I mean, everybody who's selling this candle is selling the trend. They're selling into the trend. These people are counter trend trading, and they're getting run over big time. Again, if this is becoming repetitive, that's good, because basically we're looking for the same thing over and over. Get a break, retracement right back to the modified 15, and up we go. We're looking for the 15 and the 50 both to be green. And sometimes it takes a while. When I show you the charts, you're going to see that. Same thing. The break and the retracement, this is right back to dual support of the 15 and the 50. Up we go. I didn't highlight it, but here's another retracement right back to the modified 15. Up we go. Well, these are power entry signals. I don't even have the 3-line indicator here, but eventually we get this is a confirmed downtrend. The 50 and the 15 are down. We have these buyers trying to call a bottom, trying to push the market up. They hit resistance to the upside, which confirms that the downtrend is intact with the arrow, which is a power entry, and down we go 1 tick below the close of the candle. It occurs again here, and we're in again short to the downside. Always trading with the trend, never counter trend trading. Again, same thing. Break, retracement right back to the modified 15. The triangle is a strategy entry. Now the triangle, which is a strategy entry, the X or the plus sign is a momentum entry. The arrow is a power entry. They all have slightly different logic to them. The algorithm in order for them to fire are slightly different. But what they're all looking to do for you is to confirm the fact that on the retracement, the long trend is still intact or the short trend is still intact. They flash intra-bar so that you know that when this candle closes to the upside and you put your buy stop limit order in one tick above the close of the candle, the trend is going to be intact based on the triangle and the 50 and the 15. It just helps. Remember, market structure tells us that the trade is long. We're looking for some kind of indicator confirmation. The triangle is our indicator confirmation. It doesn't mean you can't take a trade without indicator confirmation. That's that 10% discretionary component. This is a perfect move up and retracement. And if you don't get indicator confirmation, you can take it. But indicator confirmation increases the precision of the trade, and that's what we're looking for. We're increasing to trade with a tremendous amount of sensitivity, but not at the expense of specificity. Specificity is key to day trading. And these are just retracements. These are with multiple signals. It's a C candle with a triangle, which is strategy entry, and you're in on both of these moves to the upside. Up, retracement, run all these sellers over in the B candle. Up, retracement, run all these sellers over in the B candle, and they're always obliging us. Now this trade is too high, it's overbought, but look how these sellers try to push the market down into a confirmed uptrend, and up the market goes even higher. Eventually they're going to call it right, but how many times do you have to call it wrong before you call it right? Same thing again, breaking the 50 and the 15 with order flow, stochastic, and momentum, and down we go. It's really a simple system because all the parameters that define risk are all right on the chart. Now, the thing that we did was we did a year of market replay data to determine if stochastic is really a valuable asset or valuable indicator in determining an overbought or oversold market. And remember that everybody trades an oscillator differently. Some people look for oscillator divergence as a strong enough signal to take a counter trend trade. Other traders look for an overbought market to continue to buy every time a long pivot is broken. When the market is overbought, it tells you that bulls are firmly in control. When the market is oversold, it tells you that bears are in control. Now, there's a third group of traders who don't, when the market gets overbought, they step aside. They don't know who's going to be right. They don't know if the market's, if bulls are firmly in control when the oscillator is overbought and it's going to continue up, or with oscillator divergence, it's going to signal a trend reversal. So when the market gets overbought or oversold, they just don't trade at all. But what we did was we looked at a year of market replay data with our signals and determined if the oscillator ever enhances the predictive value of a trading entry, i.e., is it a relevant independent variable in influencing the ultimate outcome of the dependent variable, which is the trading entry. And what we found was it's not. So we actually don't even use the middle line or the 3 line at all. We don't care about oscillator direction. But what we did define is when the difference between the 50 and the 15 is over 18 ticks, that's where the market gets oversold. When the difference between the 50 and the 15 to the upside is greater than 18 ticks, that's where the market's overbought. That's what our analysis told us. So you'll see in the upper left-hand corner, we have a parameter called the MA diff. When the MA diff gets to about 18, that's where we know that it's time to step aside. If the MA diff is 18 ticks to the upside, it's hard to take a continuation long trade on a retracement. If it's 18 ticks down to the short side, it's hard to take a continuation short. What we're looking for at that point is a pullback into the 50, or some pullback to decrease the MA diff to allow the trend to reestablish and for us to take a further short or a further long. Now, we did even more, and this, I think, is the most unique indicator I hate to use bombastic terms like ever created or ever seen on the face of the planet or ever in a known galaxy, but the background color is not influenced by any price action or any indicator analysis on the chart. The assessment, no, it's not. It's for an 8-range chart. If you trade a 5-range chart, it's 13. If you trade a 3-range chart, it's 11. So if you want to trade a daily chart or you want to trade 4-hourly bars, we will give you the MA diff for those markets. We have them all defined. So depending upon the market that you trade, the MA diff is obviously going to be different. That's a great question, by the way. Now the background color is only influenced by 2 higher time frames, which are defined by the time frame of your trading chart. Now, if you're trading an 8-range chart, it analyzes data from the 13 range and the 21 range. And what it does is it analyzes market structure and it analyzes support and resistance. And I'll show you when we get to our trading chart that there are 3 different shades of long, 3 different shades of short. On the strongest short, you have price action and you have all support to the downside broken. When you on this dark green, you have all resistance to the upside broken and you have price action predicting a long. And I like to trade with the background color. And now the background color, since it's not influenced at all by price action here, you can see that price action really does move into the background color. And the background color is solely defined by higher time frame analysis, again, of market structure and price action. And I have not seen an indicator like that. I have never seen an indicator that uses no data from the trading chart at all to project its analysis, nor have ever seen an indicator that does not use some form of MACD, some form of oscillator, some form of order flow, some support and resistance data from the trading chart itself. This uses no data at all from the 8-range chart. If you're trading a 5-minute, it will use no data from the 5-range chart. Everything that it projects are from higher time frames. Now what I'm going to do now is I'm going to go over to the charts. And we're going to pick through them. Just give me 1 second to reshoot the screen. There we go. Okay, I think everyone can see them. And let's take a look first at the Russell today. And we're going to take it from start to finish. And we're going to look for losers. Because, when you do a software analysis and you put up slides, it's all well and good. You're always going to show your winners and make it look real stellar. But the key really is to take a look at your potential losers, because that's where their money is either made or lost. It's, the thing that I always say is it's not about the number of winners, it's about the number of losers. So the market opens right here at 9:30. And you can see that this move to the downside takes place on a yellow modified 15, so we cannot trade it. It's also at 9:31. I don't trade the market open. So you can see throughout this whole period here, the 50 is down. The modified 15 is not red, and what we're looking for is the 15 and the 50 to be the same color, it doesn't happen. Now it happens right here, and this is the only loser I took. We had the break, the retracement that we're looking for. You can see the background color is a lighter pink. It's not the darkest pink, but I had order flow, stochastic, and momentum with me. The 15 was red. The 50 was red. I took the trade to the downside, came right back up against me and gave me a loss. And then I came back. I wait for the 15 and the 50 to be with me. There's the retracement, right back to the modified 15, just like the slides. We're in here, and we go up 21 ticks. Now, there's nothing in here at all. You can see here that we're trading way off of support, way off of resistance. We want, this is 10 ticks. It's 1 point. We want to be within 4 ticks. Now, this was a potential short right here, which I did not take and I missed. But then finally, here's the retracement right here. Now, we didn't get a pullback, but the trade went 10 ticks. Down it went. Happened again. Down, retracement, 6 ticks. Same thing again. Down, retracement, 11 ticks. Now if we look for any potential losers, now this is a little bit of a risky trade. There's another retracement and down. Always trading with the trend, and the background here is dark. Well, what we're looking for, James, right now on our ATM strategy is we're trying to get everybody in on a 1-tick pullback, which tomorrow we're abandoning. I mean, what we do is in the room is we not only try to get winners, but we try to get everybody in on every winner. And in a lot of rooms, they're going to just let you take a market order. We're trying to get at least a 1-tick wick after the entry and get people in. So my feeling is if we don't get a pullback on the trade, it's really tough for traders to get the entry. So what I'm doing is I'm indicating whether or not the trade matured with some pullback to get traders in, and try to ensure that we got that 100% of the people in our room or close to it got a fill. When the trades occur without a pullback, sometimes it's tough to get into the trade. I mean, that's a problem that's very, very rarely discussed in trading rooms. I'll tell you the truth. We don't have any trouble calling winners in the room. The thing that we have to overcome, and that's a problem that's kind of not discussed, is when you get a winning entry, is getting the entry and trying to get it without any slippage. And that's what we're trying to do. We're trying to optimize our entries, trying to get everybody into the winning trades, and trying to get them in with either no slippage or minimal slippage. That is what we're trying to overcome. I mean, it's not good enough for us to get winners. We want to get people in to the trade so they can book money on the trade. I mean, that is really our goal, and that's why the no pullback indication. Now, as we go through here, we have nothing. Really nothing safe. And there it is. There's our trade, the bread and butter trade. The move to the downside, the retracement right into the modified 15 with order flow, stochastic, and momentum. And you have to wait a long time for this trade to mature. And get 43 ticks. You have to just sit through all of this because there's no retracement here anywhere into an intact trend. And this is the nice colored bias I like to help confirm a trade. Well, this is an oversold market. Not take that short. Now, this is a potential short right here. It's a break. It's a retracement. It's a little bit of a riskier trade, but you're taking it with order flow and momentum. The 50 and the 15 are both red. It really meets our key parameters. What makes it a little bit risky is we're trading a little bit off resistance to the upside. Trading 6 ticks off. But here's the bread and butter trade right here. And down we go, right to the low pivot, 10 ticks. And that was the day. Now, I could not find a loser here. And that's really the key, is that if the trades meet our trading criteria, the probability of getting a loser is very, very small. And that's really the key to successfully day trading. Now let's take a look at crude. And you're going to see how redundant it is. It gets redundant to the point of monotony. But that's what we want. We don't need it to be complex. In fact, the simpler the platform is to interpret, the easier it is to trade. You don't want to sit there scratching your head looking at multiple time frames and trying to figure out whether you have a trading entry or not. Now we start the room at 8:45. Right here. Now modified 15 is yellow. We don't trade. There's nothing here. Nothing, nothing, nothing. Is this a potential short? Yes. Right here. It doesn't come with bias. I like to trade with background bias, so I wouldn't have taken it. And this is an oversold trade. I would not have taken that trade. This is a long, long way down. And if you look at the MA diff here, and this is where the MA diff is so important on a signal like this. The MA diff here is 24. It tells you you're no longer looking to take a short here. What you're looking for is a retracement before you can take a short. And here's your trade. Retracement right here, and the move down. And that went 12. And then you have two retracements here, one here and one here. If you would have taken either one of these, this is riskier, this was safer, but you don't know that you're going to get this one. It would not have stopped you out on a 10-tick stop, and you would have gotten 32 ticks on the trade. Now here's where, again, we come to the point where we get the break, retracement, and the move down. Nine ticks. But if you're stopped out, you're in again here, and down you go. If you're stopped out, you're in again on this retracement, and down you go. And you have to see one thing, that all of these retracements are provided via the courtesy of the counter trend traders and the traders that are trying to trade, are trying to call a bottom and trying to reverse the market. I mean, clearly this is a downtrend. The 50 and the 15 are down. Why are these people trying to go long? Well, I don't know, because we're not. We're looking for these traders to push the market right into resistance to the upside so we can get a confirmation signal short and take it back into the trend. Now, we're not going to take that last signal because we're way oversold. This is where we're looking for a retracement. We're at 35 ticks. Now this is one of the guys in the room. This is his favorite trade. When the 15 crosses the 50 to the downside and you get a pullback into the 50 acts as a great area of resistance to the upside or support to the downside. And you've got a confirmation of the downtrend. You have a momentum signal. Order flow and momentum are with you to the downside, and down you go. And that's a 25-tick move. Now here is, I think, a potential loser. It's not a great trade, but if you took it, whoops, I could see why you would take it. The modified 15 is red. You're only, you're on the verge of oversold, but you might look at this as a break, retracement, and consider that you're going to move back to the downside, back to this low pivot right here. And if you do, you're going to take a loss. So that is what I see as our first loser. We exit the trades. We take everything off at 6 ticks. That's all we're looking for. 100% off. I'm sorry, 100% off at 5. But we get a 6 ticks of premium because of the fact that we're looking for a pullback. But really, our first target is 5 ticks. And there's another one. Retracement. Now, I might be hard-pressed to take it because I don't have background bias, and I'm kind of a background bias junkie, but we've got a retracement right back to the modified 15. Order flow, stochastic, and momentum are with us, and if you take it, it's a beautiful trade to the upside. Nothing here. I saw this trade. This is a beautiful trade. Break of the 15, retracement, right back into the 15. I love these trades. Back down. You've got background bias with you. You don't have order flow and momentum, but you don't need 100%. Structurally, 80% of the trade. Background bias provides us with the additional amount, and this is just a tremendous trade to the downside. And we're down 19. I mean, here's another trade. It's a risky trade on my book because I like a bigger candle body, but there's the retracement. Now, this is the exact trade that gave us that one loss we found. But this one, down we go for 13. Same thing here. We get the move up, the retracement, down we go. This is really just the power of trend trading. Now, I know there are a lot of people in the room that would take this trade. I would not. But it's a B candle, it's a C that engulfs right off the 50, with the 50 and the 15, both green. Order flow, stochastic, and momentum are with us. Again, I like to see background bias. It gives me a little more specificity, I think, but that's up for 13. Another trade. Up, back, all trend trades. And up we go. Another one. Up, back, and up we go. And I didn't pick, believe me, I didn't even pick this day. I did not even see what was going on in the afternoon. Now here is a potential loss. I have to see. You know what? It doesn't stop you out. It's not a loser. Comes close though. There's the retracement. There's the move up. There's the retracement. Your stop is here. I'll tell you this. It's going to give you a lot of aggravation because it's going to come back 6 or 7 ticks on you, maybe 8. But it doesn't stop you out. And eventually, you're going to move up to here. You're going to go up 8 and take out your first target. And this is the beautiful trade. These are the ones I love. There's the move up. There's the retracement with background bias. Order flow, stochastic, and momentum are with us. We've got I love the C engulfers. I would have been in this trade. Now it's 15:29. It's getting late in the afternoon. But that is, to me, the kind of trade where you can roll the truck up to the bank. This one too. It's not a C, but you've got order flow, stochastic, and momentum with you. You've got the dark green background bias, which tells you that you have all resistance to the upside broken on the 13 and 21 range, and you've got market structure such that it's really strongly predictive of a move to the upside, and that really is a terrific trade. And that goes 17, and that's the end of the day. I'll just do one more market, and is there any market that anybody wants me to look at? I'll look at any market you like. I'm going to do it on an 8 range because that's the template I have up. But if you want me to look at any other market, I'll be happy to do it. Anybody want to see a market? Anything special? No problem. We'll look at the ES, and Sam chimed in first with the ES. And the ES is right here. Now the ES has really been allowed. Now we trade the ES on a 5 range. So the MA diff is going to be 13. And the ES is just not giving us very many trading entries. But let's take a look. Now we got 10 ticks right here in the live trading room. And let me see here. All right, the market opens right here, 9:31. Now the modified 15 is yellow, so we have nothing to trade. Now right here, I looked at this, and this is a trade I missed. Here's a nice retracement right back into the modified 15, and it really kind of burnt my britches because it was 2 points. I just didn't get it. This was another trade. I must have been looking at another market or having or been in a coma at the time, but this is 2.7 points. Really, oh, you know, this was the pivot. We don't trade into unbroken pivots, and this candle had to break that pivot. This was the trade that I really just missed completely. Then we go to oversold. Then there's the break and the retracement, and we went down for 10, and that trade I took. Now this is where I have not looked at, and here's a loser. Here's the break. Here's the retracement. Oh, I'm sorry, it's on a yellow modified 15, and we don't trade that yellow line. I'm sorry. I thought it was a loser, but if the MA diff, I'm sorry, if the modified 15 is yellow, we don't trade right here. So that would not have been a loser. Here's the trade. Here's another trade. Get the break, the retracement. You've got the power entry short right here. You can trade a yellow 15, a yellow 50, just a little riskier, and you get 2 points. This is another great trade. Down. And I'll go back in and I'll take a look at all the questions. Up. This is a tough trade, which I may not have taken because of the pivot. I don't like to trade it to unbroken pivots. If I had the nerve to do it, it would have been 6.5 points. Now, this is an oversold market, so I wouldn't have taken that trade to the short side. That's it. The thing that I could not find today is a loser. Now let me just take a look at the questions a little bit. Yes, I always stay on an 8 range. I stay within 4 ticks of the MA, and On the ES, I try to stay within 2 ticks of the MA. No, we don't do that. I'm only giving you BLP. I'm only showing you the length of the move. You know that we're never going to get in at the top. We're going to get at and get out at the bottom. In fact, our first target on the ES is 4 ticks, is 1 point, and we're actually out of the trade. We trade 5 contracts and we're all out. So I'm just scaling the trade. Remember, you can trade your own ATM. I mean, that's what we recommend in the trading room. But no one is going to get in at, you're all going to get in pretty much at the same place, but no one's exiting at the bottom. Believe me on that. If we could do that, we would be walking on water. So let me go back to the slides. And I don't want you to think that I'm even representing that in any way, that we do that. I mean, we're looking to get in and out on a very, very conservative ATM. Now, we only have to make $200 a day after commissions, or $1,000 a week, to come up with a $50,000 a year net equity. So really, we don't need big numbers in the room every day. We just need to trade with a tremendous amount of consistency. That's really what it is. It's not coming up with an $800 or $900 day or $1,000 day. It's just consistently making $300 or $400, $300 or $400. That's what we're looking to do. If we take 2 winners, which make us $240, and we're 2 and out, up $480, and we quit. We have a very, very conservative profit target, and a very, very conservative trade management. No, our stop points our stop on the trades, on an 8 range, it's 10 ticks, but I think we're going to close that down to 7. On a 5 range, it's 7 ticks. You know what it really is? It's really based on market structure. When you take a trade on an 8 range, you want to take your stop. You want to take your entries 1 tick above the close. Your stop was 1 tick below the close, or below the open of the candle. So by market structure rules, on an 8 range, you're going to have a 10-tick stop. On a 5 range, you're going to have a 7-tick stop. On a 3 range, you're going to have a 5-tick stop. I still recommend, if you trade minute or ticks, that you're going to take your stop 1 tick above the close, and your entry 1 tick below. Sure. Our first target on crude, gold, and the Russell is a very modest 5 ticks. If we get 6, it means 100% of the people in the trade are filled. It's moved through. But we're looking for a 1-tick pullback, so we get 6 ticks of profit. In the room, we trade 4 contracts. That's $240. On the ES, because the margin is less, we trade 5 contracts. And we're looking for a first target and out at 3, but because we have a premium, we get 4 ticks. And so the profit, I believe, is $250. So for each ES winner, we get $250. On each Russell, gold, and crude trade, we get $240. So we have 2 winners in a row. We have close to $500 in profit, and we're done, and we stop. If I take a loss and I take 2 winners, we stop. And the toughest thing for me to do is stop. So you can see that we usually get great trades in the afternoon, but we're done by 11:45. If you want to trade on in the afternoon, you would need to have the software to trade. But great opportunities are constantly present, and as long as you have good volume, you can trade. And look at today how great the volume was. I mean, the ES had over 2 million contracts. The Russell had 166,000. Gold had 400. Crude 420. Just unbelievable volume today, even though it was a horrible, I mean, it was like a, kind of a blow-off market where everything went down terribly. I mean, as long as you've got great volume to power your trades, you can continue to trade on. Now I'm just going to bring up the slides. If you have any other questions, you're welcome to call us. Just let me rescale real quickly. We're good? Okay. So basically, if you get the gist for our system, this is not a buy on the blue dot, sell on the red dot system, and I don't believe those systems can ever make you profitable. 10% of trading is discretionary, and that 10% is really immense. But if you stay patient and you stay focused and you trade with the rules, this system is going to serve you very, very well. Because when you trend trade and you take safe retracements into a confirmed trend that then confirm themselves back into the trend after the retracement with order flow and stochastic or with order flow and momentum, these trades really do work. The C candles are extremely powerful. And we provide you with extensive videos, group support. We're going to give you 2 hours of personal mentorship as part of this webinar special, and we really do support our software. You can ask anyone in the room. If you call us, we're here 24/7. We pick up the phone. We don't hide, and I'm one of the software developers, and I trade the room. So it's not like I hide under a rock after I sell it to you. So I'm out there every day trying to make money for everybody in the room, and trying to reach that goal of $50,000 a year. And we have a philosophy. We never ask you to pay for boot camps. And to me, a boot camp is the acknowledgement that what you've been sold in the first place is good enough. And now you have to pony up more money to learn how to really work the system. We don't do that. If we have a seminar or a lecture, we do it for free. And also the people who have our system know we have new indicator packages and free upgrades. My God, we send out 1 million of them. And we never ask you to pay for upgrades. That background bias indicator took us a long time to work and tweak, and we give it out. If we make the software better, we want to pass it on to you and try to make you a more profitable trader. So once you become a member of our family, we really, really do try to support you. So what we're going to do is, first of all, I want to make it clear that we're inviting everybody into the room for a free look-see. I don't expect you to buy anything based upon what I say here. Come on into the room and see how I trade. You're going to see that there's some people in the room that trade better than me and faster than me. But I trade deliberately, and I adhere strictly to the rules, and I grind out the wins. And so tomorrow, you're all welcome in the room. Leo, can you put the link into the room? Leo's going to put a link in to sign up for a free trial to the trading room. And we're also going to give you, we'll give you an opportunity to buy it after you take the free, you have the free trial in the room. But what we're doing is we have a system, and I really didn't show it. It's called a direct entry software, where I take the trades for you and I manage the trades for you. And we're offering that software normally we lease it for an additional charge with the trading room. But it would be yours for life, the direct entry software. And the direct entry software is really an amazing piece of software, and we're always making it better. So I not only call the trade out in the room, I actually enter the entry into your trader, and I try to manage it from start to finish. If the trade doesn't go our way, I'll try to close it early. I try to do my best to really optimize the trade, and you can watch it evolve, or you can intervene at any time. So direct entry actually gives me control of your Superdome and allows me to do, allows me to enter the trades and take the trades for you. We also will offer you 2 hours of personal mentorship and 2 months in the live trading room for free. And the special is it's $29.99. And normally we never sell a direct entry. You've got to lease it. And it's $3.99 a month with the trading room. Absolutely. The ATM is totally configurable, James. Essentially what I do is I trigger your entry, but it evolves via your ATM strategy. So there's no problem with that. We don't force our ATM down your throat or make you take our ATM. Whatever you want to do works with us. What we want, in terms of the number of contracts, in terms of your profit targets, that's something that you choose. The only thing that I do ultimately is get you into the trade. We have trading room targets. Try to get us to those targets, and we have our stop. I try to manage the trade for you based on our own ATM, but you don't have to do that. You can put your own ATM strategy in, no problem. So here's to sign up for a free trial to our live trading room. We're going to put a button on the website for the direct entry. For the next few days, we'll leave it up while everybody is in the room. And I really encourage you to come in. I'm not encouraging you to buy anything. What I'm encouraging you to do is come in and see how we trade. And our website is www.rightlinetrading.com. You can email us at info@rightlinetrading.com, although on the home page there's a contact us link. You just click it. The email comes up all formatted. You can send us a note, or you can call us at 1-855-765-6681 anytime. We're all chained to the desk here, so we don't go anywhere. And they feed and water us a couple times a day, so we don't wither. But we're always around to pick up the telephone. And if you have any questions, just let us know. So I really appreciate your time. I know it's late in the day, and probably most of you have been trading today, and it's stressful to day trade. It's very tough. But come on into the room and see how we do it. So listen, everyone, have a wonderful night. If you have any questions, call us, email us, and hopefully I'll see all of you, ladies and gentlemen, in the room tomorrow. Thank you so much, everyone. And thank you, David. No, it makes no difference where you have your account funded. We're totally apart from your broker. We're NinjaTrader partners, but you can have your account any place. The only thing is we're only configured for NinjaTrader. And I'll just throw this in. We're about to release our own Superdome. We've actually made our own Superdome, and it's better than NinjaTrader Superdome. The thing is, it has to work with NinjaTrader because it does not have its own data feed, but it is superlative. And if you go to www, I'm going to put the website in. You can see it. I'll give you a free peek at it. www.ninjadometrading.com. I knew it wasn't going to take it. Okay, if you go to that website, you'll get a free preview of our own Superdome. And it does things that absolutely no other trading platform does. It will sell or buy a trade on candle close. You can configure pullbacks. It is the most configurable trading platform ever. And it really is a great piece of software. But come on into the room tomorrow. I don't want to take too much of your time more. Have a great evening, and hopefully you'll become a member of our family. Great then. Thank you so much, Frank. Everybody, have a great evening, and I'll see everybody tomorrow. Thank you all. Bye-bye.